Alright, welcome back to the channel. It's me, Adam, and in this video I want to take a look at a bunch of unorthodox charts that not too many people look at, and this is something I've been doing more of as of late. And you can honestly make a lot of inferences and judgments based on the data that you're seeing, and it's actually pretty cool. So we'll take a look at that and a bunch of other cool ones, and let's get started. Alright, so the first one and the most straightforward, again taking the two biggest looked at indices, the Nasdaq and the S&P 500. So the relation between both of them, essentially the higher this goes, that means the more the Nasdaq, and which is more tech heavy, is outperforming the S&P 500, which is more diverse. It also has technology, of course, but you have other things like energy, financials, defensives, and so on. Just like any chart, we also have key areas, we also have moving averages, we have resistances and supports. Again, it's not so much price action, but again, it's all like a universe. It all interconnects. It's all like math, and it all makes sense when it comes together. And again, you can make those judgments and see what big money's doing behind the sidelines. Again, most people aren't looking at this kind of stuff. Most people are looking at just like, did they go up or did it go down? Like, how's my investment doing? Oh, I lost money. Most people really aren't caring that much. And then the people that take the next step and they want to pick their own stocks or their own ETFs. And then there's technical analysis, and then the rabbit hole that is. And that's essentially what unlimited options is. It's a rabbit hole of finance. So again, QQQ SPY, we had this upward channel, or this wedge you could say. It was making higher lows and higher highs, broke out of it once, got rejected, but then again broke out again. And then we're near the top of that area, that 20 exponential moving average on the daily time frame. But probably around here at this 0.78 area is probably a key area. Again, resistance on the 8th of August. An area of consolidation resistance in April as well as March, support back May of 2021, and then zoom out even more. Also an area of resistance back in May of 2020. And essentially what this is telling me, and again, this is very dynamic, this can change as abruptly as tomorrow or whenever, is that for now, tech is leading the way. There's no reason to doubt it until that trend starts reversing, which so far it hasn't been. Again, making higher lows, higher highs, continuing to find strength right now. Let's say here it's been 2 steps up, 1 step back. Let's see how it continues. Is it going to continue taking a step back for 2 steps back and then maybe even 3, at which point it could break this uptrend, but maybe it takes 1 step back and then takes another few steps forward, testing this 200 simple moving day average in that 0.79 area. Another 2 indices that I've been comparing is the IWM to the SPY. So IWM being the Russell 2000, 2000 small cap stocks versus the S&P, which again is the 500 biggest and most reputable companies in the United States. And because we've been seeing a lot of breadth in stocks, and what that means is that the stock market in generally vaguely has been going up. Let me actually show you that chart first. So collectively, this is the S&P 500 stocks above the 50 moving day average, and only 0.78% of them were above their 50-day moving average on June 17th. So we went from this oversold area below 10, quickly moving all the way up to where we were on Friday, above 90, and that's an official marker from going oversold to overbought. And over history, if we take a look at, let's say, the weekly time frame, whenever we went from oversold to this overbought 90, marked the bottom of the market every single time since 2008. The great financial crisis, same thing here in 2018, the pandemic lows, obviously. Here in 2015, it actually didn't hit 90, and this was a false marker, but then a few months later going oversold, hitting 90, and that was the bottom of the market. So this has happened 100% of the time since the great financial crisis. Again, maybe this time is different, but just using statistics, that could be a good marker that those June lows were the lows indeed. So again, going back to the IWM and the SPY, what does that have to do with the IWM? Essentially, if there's more breadth, and that means small cap stocks are also rocketing upwards, small cap stocks in this kind of environment, if there is more risk on, which we'll also see in a moment, small caps could very well be outperforming. So again, the IWM to the SPY, and they have been outperforming ever since the middle of May. And right at a key area of resistance at around 0.47. So if we are able to break this area, the next area could be around 0.49. Alright, another chart is XLK to RSP. XLK being information technology, so you have names like Apple, Microsoft, Nvidia, and the like. And then RSP is the S&P 500 equally weighted. Essentially, all the sectors are equally weighted, so it sees how information technology is doing relative to the other sectors in the market. And again, technology, similar to QQQ to SPY, has been outperforming for the time being until it tells us something otherwise. we're locked in an uptrend, but at the ratio of about 1, there is a lot of overhead resistance, the 200 simple moving day average. And even if we looked at the SPY and the QQQ, they're also reaching near-term resistances. The QQQ looking like it could be breaking out unless it fakes out this week, and the S&P 500 right below its 200 SMA, as well as still below that downtrend since the top of the market in January. Another one, XLY to XLP, so XLY being consumer discretionary, names like Tesla, Amazon, and XLP being consumer staples, so names like, Procter & Gamble, Walmart, just no matter what's happening in the economy, recession or not, inflation or not, people are still purchasing these items for everyday use. Look at this one as a risk-on, risk-off gauge. And again, it looks like we have been breaking out of what was overhead resistance around 2.19. If we continue breaking out of these areas, the next clear level will be around 2.33, right around that 200 simple moving day average, what was previous resistance and previous support. XLP to the SPY, so again, consumer staples to the S&P 500, and another way to kind of measure risk off versus the overall environment, and it looks like a clear double top in this area. If we are to break 0.18, it could signify a continuation of the rally in the markets, as well as this area we're at the moment was also resistance back in March of this year, as well as near resistance back in 2021. And we have ARK to SPY, so Cathy Wood's ETF to the S&P 500, and this one has been in a slight uptrend as well since the beginning of May, but I'm not a big fan of ARK and their holdings at the moment. However, if there is more risk on, the companies that she does hold are very high risk. They are highly unprofitable. A lot of the names are very speculative, so in that kind of environment, they will succeed, but it hasn't been too great. We have USO to SPY, so US oil to the S&P 500, and at a very key area at 0.17, a little bit above that 200 simple moving day average. So oil could very well be nearing an area of support. If this is to break, that'd be amazing for inflation and for the market long term. But for the time being, I'm not really betting on that. Definitely looks very weak. You can tell the day that oil actually started going down was the day the market began rallying in the middle of June. And we also have crypto, so Bitcoin to the S&P 500. And if you take a look at the weekly time frame for this one, we're able to connect the resistance over here to the supports over here to where the market did bottom for the time being, right around that 200 simple moving day average again. And Ethereum to SPY, and this one's a little bit more wonky. It's more of a roller coaster, if anything. I'm not really able to tell any kind of judgment or any kind of inference from it. Let me know in the comments below if you can make something out of it relative to what we've been seeing in the other charts, but really the correlation is not really there at all. The ratio is kind of all over the place, but it's still interesting to analyze. Maybe eventually in time there will be, but for the time being, no. However, it did bounce very nicely off that 200 simple moving day average on that weekly time frame, and on the daily time frame, right at the area again where there was previous support would probably now be overhead resistance. Otherwise, that's the end of the video. Let me know in the comments below, what are your thoughts on these different charts, these unorthodox charts. Let me know in the comments below. As always, subscribe and like, and I'll see you guys in the next video.